discuss how Likkle ideas are transformed into big dreams. The toolkit, and you will access a lot of resources. A lot of the information that we presented here today, there are a lot of activity sheets, so we encourage you to download some of that information. Also, there's a digital swag bag with Good afternoon, everyone. It is Wednesday, April 14th. Actually, it's April 12th. What am I saying? April 12th. I'm getting ahead of myself. And I'm Doreed Whitlock. I'm the Chief Marketing Officer for Samuel Fields Consulting Group. We are delighted that you have joined us for another edition of Likkle Byte Ideas. Of course, we're celebrating April as Financial Literacy Month. And along with my co-host, Megan Samuel Fields, who is our Chief Executive Officer, we are delighted to welcome all of you to another edition of our Wednesday show. If you're joining us via Facebook or if you're joining us via YouTube, we're delighted that you have joined us. So I believe Megan is going to join me momentarily.
I am here.
Okay.
Hello.
Well, happy Wednesday to you.
Happy Wednesday to you as well. This month is just zooming on by.
I am telling you, it was just April 1st, now it's April 12th. What is going on?
It's crazy.
It's like we jumped from 1 to 12. I can't remember anything in April.
Yeah. Well, the one thing I can remember in April, when you said April 1 just now, I actually got a big All Foods Day from my son. He really fooled me off. I didn't think people still did that, but I got a big fool off.
That is so funny.
I did, but it's all good. It's all good.
Glad to be here. I guess you're not going to share on this program. It was that bad, huh?
No, I can't. I'll tell you privately.
Okay. Well, of course, folks, we are celebrating Financial Literacy Month. We love Financial Literacy Month here at SFCG and on Likkle Byte Ideas, because we have so much packed. We have such a packed schedule. We have so much going on that there's never a dull moment. It's a month that allows us to really get out and do a lot of the public awareness, a lot of the free education, a lot of the tips and tools that we so love. This gives us an opportunity, a platform to really share the information and some of the exciting news. Today, we are going to be we have a really interesting guest. I don't think we've had insurance as insurance sector. I don't know that we've done much throughout our year and a half of this show, but today we are going to be talking about an aspect of financial literacy that a lot of us grapple with. And today's topic is the role of financial literacy in the development of insurance awareness. So we're going to be talking about insurance awareness. We have a special guest who we will introduce momentarily. However, I want to thank all of you you've sent us your local sayings. I hope everyone by now has heard about our financial vibrations. Jackie Quinn on Observer AM. Every morning, every weekday, she reads a financial saying. And of course, she gives a historical or a local saying, I should say. Something that we've heard our grandmothers, our aunts, our neighbors, a lot of the elders. They talk in codes. They talk a special language, which we all understood. But you know what? We all got the message. So we are interpreting some of these famous local sayings, and we have given them a financial meaning. So Jackie has a list that she does on air. And then what we're doing, we have a lot of our viewers family members who are also submitting their local sayings. So the one we're going to share today hasn't even made it to the radio yet. So Megan, let's get our financial vibration Likkle Byte Ideas edition and give us our. Let me give you an opportunity to audition for Jackie's show, Megan.
All right. I think I'm going to do a better job than she does with the dialect.
Okay.
So the saying is, cockroach now have no right in a foul party. Cockroach now have no right in a foul party.
Not at all.
Not at all. And the financial lesson is focus on your money values and your needs, because some friends are a bad money influence. Focus
Ain't that the truth?
And your needs, because some friends are a bad money influence. So make sure you check out your friends. Some of them might be having a bad influence on your money and what you do with your money. Consider them to be the cockroaches, and they have no right in your foul party.
Fantastic. Well, we hope that you guys will continue to send us your local sayings so that we can transform them into financial vibrations with a financial lesson that we can share with the world. And of course, as we mentioned last week, this is all going to be a part of our game, 5 to Survive, which we are going to play on the last Thursday of this month. I believe that's the 26th. Wednesday of this month, which is the 26th, I believe, the day before Teach Children to Save Day. So keep sending us your local sayings. We can't remember everyone. Megan, I met with Chef Murphy the other day.
Oh, no, I know he
Guess
has a
what
lot.
the local saying? This one, if anybody can find a financial lesson for this one, we have a prize for you, because I thought about this one and this is beyond me. When was the last time anybody heard this saying? Because Y has a long tail and W has none.
Listen, there are some financial lessons you just can't explain.
That's what I thought. Like when your mother tell me, because I say so. That's what I thought about. Yeah, because I say so. When you ask your mother why save? Why save? Because I say so.
It has a long tail and W has none.
W has none.
I haven't heard that in years.
I keeled over. But to all of our listeners, we know that you have a lot of old sayings from your family, from your village to share. Please drop them in the chat. We'd love to share them and perhaps brainstorm on a financial meaning for them. Or send us an email, info@samuelfieldsconsulting.com. If you're a little coy, you can email it to us as well. Or WhatsApp it to Megan at 464-0841. So let's not keep our guest waiting.
Here he is, Mr. Harry Hobson.
Mr. Harry Hobson.
Good afternoon, ladies.
Hi, Harry. Insurance.
Yes, good afternoon. It's a pleasure to be here this afternoon. It's a pleasure to be sharing some ideas with your audience.
So tell me, Harry, have you heard that saying, cockroach and Hannah right in the foul party?
I've heard cockroach have no right in the foul pen, but I like the sort of adjustment to mean. But I understand what it means.
Exactly.
I've heard it before. Yes.
What about Y has a long tail and W has none? What's the lesson there?
I think it's more along the lines of you questioning the authority of someone. Like they would say, I have the experience, so listen to what I say.
Yes.
And I wouldn't guide you wrong.
Yeah.
So don't question my judgment.
Don't question my judgment. Yeah.
Because Y has a long tail and W has none.
And that's just the way it is.
That's just the way it is. Yes, indeed.
Fantastic. So, Mr. Hobson, tell us, how long has Anjo Insurance been around?
Oh, we have been operating since 1928.
Ooh, wow.
Are you serious?
Yes, we have been in business
I
since 1928.
I didn't expect to hear 28, but I know you guys have been around forever.
I know
For a long
forever,
time,
but I
yes.
didn't think it was that long. Wow.
So you
Yep.
guys and you guys are 95. A nice
Yes.
celebration coming up soon.
Oh,
That's
very soon, very soon. Looking
wow.
forward to that as well.
Oh, that is a legendary business.
Do you know
Fantastic.
if that's the oldest insurance company in Antigua?
Actually, no. I think Bryson's has been around for longer as well.
Oh,
I'm
wow.
surprised. Oh,
Hmm.
wow.
Hmm.
And of course, Sagicor has been around for over 150 years, I think.
I see. But I meant in Antigua itself. I know Sagicor is a
No,
regional.
I think Bryson has been longer than us.
Oh, I see.
Yes.
Okay.
And how long
Hmm.
have you been with Angel
I
Insurance?
have been here for, notwithstanding my appearance, about 34 years.
What?
Whoa. You start at 10,
How
man.
is
You
that
started working
possible?
at 10.
Thank you very much. Again.
34 years.
Yeah,
Wow.
I've been here for a
Really?
while. I've been here for a while.
34? Wow.
34 years.
So we can
Wow.
call you a veteran.
Yes, I'll accept that.
Oh, for sure. 34 years of anything.
Yeah.
That's
Yeah.
that's
So,
commendable.
Thank you
so
very
Mr.
much.
Hobson, we were talking earlier
Mm-hmm.
about finance, and unfortunately, I'm sorry, we were talking earlier about insurance.
Mm-hmm.
And unfortunately, we were discussing that one of the issues with many people as it relates to insurance, the insurance guy is just a nuisance.
Mm-hmm.
You're paying all this money. What am I getting for my money? That's $150 that I could be spending on all kinds of things,
Mm-hmm.
right?
Mm-hmm.
There. So suffice it to say, there's a big void, a big gap in education and awareness about insurance as a financial literacy tool,
Mm-hmm.
as something that can enable you, something that can empower you. Let's
Mm-hmm.
talk about that a bit. And, the whole concept of insurance. Why should people get insurance, and how can people see insurance as a plus and not a minus, not a negative?
All right, thanks. I think I should start first by laying into some foundation and some key terms that you'd hear in insurance language that may somewhat confuse the person seeking insurance, and of course, we definitely need to explain what they are, so at least you can understand what it is we're saying. First of all, insurance is always also and mainly about a risk. That is the possibility of a loss occurring. Now, insurance deals with two types of risks, or there are two types of risks that confronts any person: risks that are considered to be pure risks and risks that are considered to be speculative risks. Pure risk has two outcomes: a loss or no loss. Speculative risk has three outcomes: a loss, break even, or a gain. Now, you can see by virtue of the definition that insurance would not be involved in speculative risk, because insurance is always concerned with pure risk, which is a loss or no loss. So here we have it, a situation where you may, once you find yourself in a situation and the outcomes are either a loss or no loss, more than likely you can seek insurance protection on it. Now, insurance also has what we consider to be long-term policies and short-term policies. Long-term insurance companies are those that issue policies for long-term, like 20 years, 30 years. We're talking about the life insurance companies. And those type of insurance tend to offer investment opportunities for its customers, such as annuity policies, such as endowment policies, such as protection under life, medical, health, and those type of insurance. Andrew is not doing that at this point. We are on the road to it, but we're not doing long-term policies at this point. However, the short-term policies are what we all commonly know the insurance to operate in and provide. insurance on your home, insurance on your car, insurance on your business, insurance for your valuable asset, your jewelry, and the likes. Now, as we know, um, those short-term policies, as the name suggests, runs for 1 year. And companies who engage in short-term insurance are called general insurance companies. The other long-term policies are called life insurance and pension plan companies. So Andrew Insurance is at this point, we are a short-term insurance policy or a general insurance provider. Okay? Which means you can come to us, we insure your home, we insure your business, we insure your car and the rest of it. Now, to tie it into the theme that we are discussing this afternoon about being financially literate and making good decisions as it relates to your finance. Most of us, once we would have, began to acquire anything of value, jewelry, a motor vehicle, your home, it does cost you something. It's an investment that you're making. Some will be a large investment, like in the event of a home, or it may be a much small investment, like you buying jewelry or buying something as common as your cell phone. These are investments that you make on a regular basis. Now, how many of us are in the position that if you suffer a loss, you lose it, or it's destroyed, or it's damaged beyond repairs? How many of us are in the position to replace it? If you're in that position, then you don't need insurance. But many of us, I think most of us will put our hands up and say, if your home is destroyed, can you take the money out and go and rebuild it without batting an eyelid? Many of us would say no. So here's where insurance comes in, because what insurance is all about, I said it's a risk transfer mechanism, and we're in the risk-taking business. So what happens in a case like this is that an insurance company would provide the facility to allow you to take that asset that you have invested in and place it with an insurance company. What insurance company is guaranteeing you is that in the event of its demise, loss, damage, stolen, or anything of that nature, you can rest assured that your investment will not go up in smoke. So what it does, it releases your personal funds to do other things. So let's look at insurance as it relates to, I'm not sure if you have any questions at this point before I move on.
Well, for me, no
question. This is
question.
very interesting.
Yeah. For
Well,
me,
say
no
this-
question. Sorry, go ahead, Dorit. I'm sorry.
No, you go ahead.
No, what I was going to say, I don't have any questions, but you have brought so much clarity for me. There are some things that I didn't realize they were fuzzy in my mind. So
Same here.
I'm glad you're taking the time to explain. It's very interesting.
Thanks. Okay, so let's move on to how insurance functions. Okay, so we said earlier that the insurance is a risk transfer mechanism, and here's where you transfer the risk from yourself. Now, once you get to the point of acquiring an asset, there are 3 decisions that you would normally, consider. Do I accept in full? Like in case anything happens to this risk, I can handle it? You answer that question. Do I need to take steps or measures to mitigate my loss in the event something happens to the risk? You answer those questions. The last thing, if the answer to those questions is such that you cannot absorb or do enough to the risk to make it better to avoid a loss, then you say, do I need to transfer the risk? So I need to transfer the risk for myself to some entity that is prepared to accept the risk that I have. And now you may tell yourself, oh, it's not a risk. I mean, yes, I buy a house, it's in good condition, it's not a risk. But life itself is a risk. I mean, none of us know what will happen tomorrow. You're here today, you walk on the road and a car come and hit you off the road. It's a risk we take. We hope that we get home safely every day. We hope that we can get home this evening, our home will be there waiting for us. We don't even know tomorrow there's going to be a strong earthquake. So we know that every day spent above ground, we are at risk. Okay, it may not in control of it. Certain risks you can take measures to sort of mitigate, but other than that, it doesn't change the fact that the risk is there. So the insurance companies are in the risk taking business. I mean, we would have analyzed the situation. We would have said to you, okay, for the risk that you present, let's take a typical risk that most people would have, a motor vehicle. What are some of your exposure? You're exposed to liability, where you can actually injure someone else's property, or injure someone else, or you may damage someone else's property. You also can suffer a loss of the vehicle itself. In other words, you can may fall asleep and hit a pole, or you may have an accident where nobody is accepting responsibility, and the vehicle can be totally destroyed. You would have spent 30, 40, even $100,000 buying this vehicle. You may owe a bank for the vehicle. Now, the bank will allow you a loan to buy the vehicle because the bank is confident that the insurance will protect the vehicle in the event of a loss. So therefore, the banks make it easy for you and say, no problem, I'll give you the loan to buy the vehicle, but you must have it insured. So it is something that is very much used by lending institutions to ensure that they can assist you in acquiring the asset. At the same time, the asset is protected in the event of its demise. So insurance provide that facility where it allows you as a person to be able to gain um, capital or gain assets by virtue of providing that safety that the bank or the financial institution needs to allow you to acquire the asset. How many of us can go and build a house out of our savings? And if you could, would it be prudent for you to use up all your savings to build a house? And my answer would be, and I'm sure you ladies would agree with me, that it's not prudent to do that. They are a lending institution that is prepared to lend you the funds to build a house. The institution would lend you the money with confidence, knowing that they can get insurance on the asset that they're going to invest in.
Right.
Not only during the construction phase, but also when it's completed. Okay, and for a small premium, a mere fraction, some cases like 0.9%, some 0.8% of the fraction of the building, you're paying that money to an insurance company, and you can consider having what we call peace of mind because you are protected in the event of a loss. And as I said, in our part of the region where we constantly suffer from earth, the fundamental perils such as earthquake and hurricane, and we know we live in a hurricane-prone zone. So in cases like that, we want to make sure that your home is protected in the event of a loss. The banks can feel comfortable knowing that you have insurance, and once the insurance is on the property, you can have peace of mind knowing you can go about using your funds now to do other things that you'd want to do. Insurance also provides security in a sense that let's look at a small business. A small business may need to have its funds to invest in its business. By taking out an insurance policy on your business, releases that capital to allow you to invest in your business. Let me say it this way. Without insurance, as a business, you want to put aside some money in the event something goes wrong in the business, so your business doesn't go belly up. Okay, so every year or every month you make your money, you say, let me put aside something in case this building got destroyed by fire, or let me put aside something in case something happened that hampers my business. With insurance now, insurance takes a fraction of that savings you have, and by doing that, it releases the money you would have had to save in the event of a loss or something happened to the business. So you can use that money now to invest. So it provides the security, or we consider to be peace of mind, knowing that you can use the funds because you have insurance protection, and it does allow you to use those funds for the further development of the business.
And what do you call that type of insurance?
Well, let me put it this way. You have various type of insurance on your business. You first of all has to do what you consider to be a risk assessment. So you would look at your business and see if your business is such that it be exposed to great liability risks, such as customers getting injured, or your guests who come in to do business with you, like those people who are in the tour business, those who are in, say, sales and so on. You may find your exposure could be um, public liability, injury to the public. Your liability could also be exposed to um, accident or damage to your employees as well. You have the physical risk itself, such as the building, the stock, the furnishings, and the likes. Even as far as the money that you accept in the business can be covered in the event you got a hold up on, and as the case may be. Um, so you'd be talking about workman compensation. We're talking about public liability. We're talking about burglary insurance. We're talking about um, fire and perils insurance. You're talking about even fidelity guarantee insurance. Fidelity guarantee insurance speaks to the dishonesty of your employees, like those who are entrusted in certain positions to manage money on behalf of the business. In the event that there's some sort of embezzlement goes on there, you're protected by by having a fidelity guarantee insurance that will protect the business from those sort of losses as well.
Wow.
This is so interesting.
This is so interesting.
Yeah.
But
Mm,
let me say this to you, Mr. Hobson, before you continue, and we probably should pause to see
mm.
if our viewers have any questions at this point, because it's a lot to digest, but very great stuff.
Mhm.
How does your organization and other insurance companies provide this type of education to the public? It sounds to me that except if I approach you as an agent because I have a concern, I don't know how else I would get this full. I mean, where can persons go to get the broad spectrum of education that you have laid out here today? Because it's so important and it's so in depth.
Mhm. The sad thing is that most the public and the whole think of insurance as insurance. Do I have to? They don't even want to understand what insurance is about because they think insurance is one we consider to be
It's a bill. It's another bill.
another unnecessary
Another
evil.
bill. Yep.
But it is
But
another.
it is
It is another bill, but another necessary bill. And I think
Yes.
necessary
that's the
necessary bill.
problem.
Yeah.
They're not seeing it as important as your electricity bill or as
Mhm.
your water bill.
Yes.
You,
But I
you see,
think they need to recognize that it's something that's necessary.
Well,
But
the
I
whole
it's
wonder,
concept of risk
well,
yes,
is difficult for
absolutely,
people to
yeah,
grapple
yeah,
with. I
that's
yeah.
where
mean,
I wanted to go actually.
it's the whole concept of risk. Forget
It's
insurance, just in your life. And the way you
mhm,
said it, life is a risk. And I think once you said that,
mhm,
it became very clear to me.
Absolutely.
mm,
Everything came together. So, I mean,
Yep.
I think your organization and some of the other insurance companies, I don't know, there's an industry association,
we
an
do.
umbrella association. I think you guys there's a huge opportunity
I think so.
to better educate the public because you just gave us in a mouthful what we needed to know. I know I'm looking at insurance very differently because you made that statement and
It was so clear.
helped us connect with the whole concept of risk and
Mhm.
why it is something that's out of our control.
It is out of our control,
And
and this
here's
is
the thing that I
mhm,
like when you mentioned risk. I try to put it into the same kind of area as when you're doing an investment. And I always tell people, whatever investment you're doing, you have to look at the risk, the
Yep,
risks, the reward.
mhm,
And insurance, the way you mentioned it, it's passing on that risk. So the same way you look at an
exactly.
investment and determining whether you want to take on this risk. Here it is, you have a
An
house.
option.
You have put all your hard sweat and tears and your money into this building. And there is a risk. We can say what we want, but we live in a
mhm,
earthquake prone, hurricane prone, I won't say flood prone, but
Well, things we don't even know prone, because before COVID, we didn't know we were
exactly.
prone.
So all the prones, and
Mhm.
we uh we put all the money into this house, but not stopping to realize, look, this is in fact an investment, whether it's this is what I'm going to be living in my retirement, or whether it's actually an investment for like rent for down the road. There's a risk involved. Don't you want to weigh that risk? And I like what you said. It's either you take on the risk
Hmm.
or
Or you
you
pass it on
pass
to
that
somebody
risk on.
else.
And I think when you wait like that, I want to think the average person is going to say, I really can't take on this risk. So let me
Mhm.
look and see how I can mitigate this risk by
Hmm.
getting an insurance company in and paying a fraction of what this, if
The
this risk
value, the
is.
value of the asset is.
Absolutely. But I do think I like what David is saying, that there is a need for the insurance companies to somehow break it down. The average person does not like the word insurance.
And it's a difficult concept. And, it ties into everything we've been saying. Financial literacy. What is financial literacy? It's
Yeah.
the ability to understand basic financial concepts and the possession of knowledge and skills required to make informed and effective financial planning decisions using the available financial resources that we have. So,
And
Hmm.
if,
risk is a financial concept.
of
It
Risk
is.
course,
is a
it
concept
is.
that I don't think we have
I never
properly
thought of it as a
defined it.
financial concept before today,
It
even
is.
Yeah.
though we
Well.
say it.
Mhm,
Hmm.
mhm.
All right.
I
So
wonder if you can take this back to your. Is there an umbrella body? You said.
yes, we're somewhat dormant though. We do have an insurance association, and but let me say this, ladies. The thing is, insurance is always it's dynamic. It's not the same. It keep on changing all the time.
Mhm, mhm,
And years ago, insurance on your home used to be the perils that are being covered were limited to things just like this basic ones: the fire, the hurricane, the earthquake.
mhm,
Now, insurance has sort of we are giving you more. So most of the policies now on your home are considered to be all risk. So you'd find the term all risk being used. Like in other words, you're covered for everything
Hmm.
except certain things that are listed as exempted. So the cover is much wider. Even on your billing under construction. I remember when I started first, you could only get fire, hurricane, and earthquake on the billing under construction. Now, with more information, of course, with the growth in the industry, we are now offering full perils, all risk insurance on your construction. Covers the material that is being incorporated into the site. It even covers material when you purchase it from the lumber yard, and you put it on the truck and you're driving it to the site. In the event something happens to it while it's on its route to the site, is being covered. So insurance is all about trying to meet the demands and needs of the public. And you may have a risk now that you consider to be special or one off.
Hmm.
And maybe today you may not get insurance on it, but tomorrow you can have insurance on it. Now, I mentioned about billing your home. Here's another way of looking at this as well. Insurance provides an opportunity for you as the potential property owner to acquire assets. Now, let me take it slow so you can understand what I'm trying to say here.
Yes.
Many of us, some of us, many of us would like to approach a bank to get a loan for a home. The bank requires that your personal injection would be 20%. They may take 10% in the virtue of the land value, or they may take the other 10% in terms of cash injection. Here's what insurance is now providing for you as the customer. Insurance, in collaboration with the banks, would issue what we consider to be a mortgage indemnity insurance.
Hmm.
What it is, it's a policy that the bank will accept as a financial instrument that would eventually reduce the amount of cash injection you have to come up with upfront when you get acquiring a loan. So back to the example, the 20% down, 10% in land value, the bank may require, say, a mortgage indemnity insurance, and you may only need to come up with 5% of the value of the house, as opposed to you having 10% of the house. So when you approach your financial institution about getting a loan, you may want to inquire if they accept mortgage indemnity insurance. What that insurance does, it protects the bank in the event of a forced sale of your property. If they end up being a loss in the actual sale of the property, the insurance guarantees the bank that they would not lose because the shortfall will be paid for by the insurance company. So upfront, it allows you to be able to have access to the funds to build the house, because your personal injection would be much less than if you had to come up with 10% of the value. Okay? And all you need to do is approach an insurance company, purchase a mortgage indemnity insurance policy, and that is a mere fraction of the cost. It's a one-time cost, and it lasts the duration of the loan. So it's not an annual payment. So if your loan is for 25 years, you pay a one-time premium for the entire duration of the loan. All is required of you just to maintain your normal annual insurance on the property, satisfy the bank, and you're good to go. So as I said, insurance is constantly changing, come up with new ways to try and make it easy for the customers to be able to acquire assets, to protect your assets, and of course, give you the peace of mind you need. And of course, it does releases your personal capital to do other things that you want to do.
And as I listen to you, Harry, I think of our 5 money musts.
Absolutely.
And every step of the way, I see insurance being a part of it. You're doing your planning. So all 5 money musts are planning, financial planning, setting your goals. So if you're planning for that big house, if you're planning for that vehicle, if you're planning for that trip, you need to include insurance in there. Then we have budgeting, which is another must. When you're budgeting, as we said earlier, insurance is an expense. You should consider it as an expense, just like your utilities. You know, you have to pay for your phone, your electricity, your water, your gas. Insurance is one of those. Then we speak about saving. You need to be able to save your money so that you can cover your insurance expenses. Then multiplying your money. Insurance, again, it may not be the specific insurance that you offer, but if you can have insurance that it has more of a long-term benefit to you. That's where it comes in. And managing your debt. So getting that mortgage, just as you just mentioned, that particular insurance that you offer, that would be a good way to help you manage your debt. And then enjoying your money. Once you've bought an insurance, a life insurance, or some type of long-term insurance, then you can enjoy your money. So as I sit and listen to you, I realize, oh my goodness, insurance is a part of all the money musts, and therefore an important aspect of financial literacy that we should become acquainted with. I'm not saying that every individual needs to be an expert in insurance, but I think we all should understand the basics
and the logic.
And the logic, especially the risk aspect. And don't be afraid to speak to your insurance advisor. Mr. Hobson, you've done an excellent job today in explaining insurance, the need for it, the different types of insurance. I realized about long-term and short-term. And I liked what you said about if it's going to be speculative, or I can't remember the other one.
It's pure.
Right.
Pure or speculative.
Pure or speculative. So these are such important points that we all need to be aware of. Let's not bury our heads in the sand. We need to understand about insurance.
And I made a note when he was, I'm the marketer, so it has to tie in for me. And the note I kind of wrote was, wow. So it's all about reducing the risk in your financial planning. So we always talk about the importance of financial planning, but it's the insurance that is going to help you minimize the risk in all of those plans.
Yeah.
So in all of the five money musts that you talked about, Mika, right? For all of those, we need to minimize the risk involved in most of them,
Oh yes.
right? And insurance can help you minimize the risk in your financial plan.
Yeah.
And so, what Mr. Hobson, what I hear you saying is, an insurance company helps you offload some of that risk
Hmm. Hmm. You
and
know that.
helps you eliminate some of the uncertainties
Hmm.
that
It,
come with the risk.
Yeah.
So we would love to come in and help you guys teach your class because
Yeah.
because
it,
Seriously.
I think you're very knowledgeable. I think you did an excellent job explaining it. But I think of all of the financial literacy concepts, I think insurance is that's perhaps where the biggest need is, the
mm-hmm.
biggest void, the largest gap, because
And
it's
the
just
biggest fear. I think there's a
biggest
fear
fear.
out there. Mm-hmm.
Because
Hmm. Hmm.
risk, I mean, risk is the unknown.
Yes.
And
Yep.
when you think about, I mean, take insurance out of it. What's your biggest fear in life?
Hmm.
The unknown.
Mm-hmm.
Yes. That.
Mm-hmm.
If you know it, if you can measure it, you can manage it.
Yes.
Yes.
If you can
Yes.
identify it, you can categorize it.
Hmm.
If you don't know it, I guess you just have to insure it.
I like that. I like that. You know,
So,
one of the first term that I sort of familiarized myself with when I got involved in insurance is the whole concept of risk. What is risk?
yeah.
Mm.
Risk is the uncertainty of a negative outcome. You know, it's just that uncertainty of something
Yes.
happening.
Is
And
it one
because,
inch?
as I said,
Is it 1 inch or is it 10 inches?
Yeah.
yes, yeah, once you're uncertain with something and there's some mechanism, some facility that is available to help you to mitigate that risk,
Hmm.
you need to explore it,
Yeah.
Exactly. Exactly.
right?
So, I
And
mean,
and
yeah, a
this is
small
what,
accident versus a
yeah,
huge
the
accident.
accident.
A fender bender, anybody can deal with. Nobody's scared
Mm,
about that.
mm.
But a write
In,
off that where somebody passes away, and that is a problem.
Mm-hmm.
and the thing is, on our streets today, there are many, many cars that some
Hmm.
people take the chance of driving it without insurance,
Oh,
Hmm.
that is scary.
and the exposure is so great because, believe it or not, it doesn't necessarily mean that you have to cause the accident. You could be in the wrong place at the wrong time, and someone who's driving without without due care and attention may hit your car.
Hmm.
Then you realize that you have no insurance. You're in trouble with the law. You could have injury involved, and then you have the person who's injured can't get any compensation for the injury. So the exposure is so wide. So therefore, why take that chance?
Mm-hmm.
The insurance for the motor insurance cost is very small in the scheme of things. When you compare the insurance costs in the Caribbean and in Antigua to those that maintain, say, in other parts of
Oh
the
yeah.
world,
Absolutely.
it is not that prohibitive. But yet people want to take the chance of not insuring, and then when something happens, then you hear all the sad stories. Okay, so don't get caught in that situation. You go to your insurance provider, make sure insurance is always up to date, make sure the policy is there, make sure your licenses are in order. And of course,
Mm-hmm.
if you own property, make sure your property is well covered. Make sure you put aside your policy. And I know you get ladies asked earlier about providing education and getting information out to the public. Um, in our sphere of things here at Andrew Insurances, we treat our customers a little differently, other than just simply come in, accept your premium, and send you out. We are here to answer any question and any concern any customer may have. And believe it or not, ladies, many times I've had to answer questions from other people who are not even insured here. When they run into problems, they call me, say, Mr. Hobson, um, X, Y, and Z is the situation. How does it work? So many times I've had to literally explain how the policy functions. What are your rights and the benefits of the policy and the rest of it.
Hmm.
So it's definitely very important, very interesting that you should maintain um, insurance protection on your assets to protect your investment, and also to provide that peace of mind you need, because that's all we need. We need to have peace of mind to function in confidence, knowing that in the event something goes wrong, I mean, you have the services of an insurance company, a reputable insurance company.
Mm-hmm.
That's very important too, because you do have a lot of companies that may not be, as reputable as they ought to be. But a company that is there for you when you need them most.
Yeah, that sounds like an ad.
Well, a company that's been around for 95 years. I don't know.
You know?
How much more? I don't hear any risk
We
at
have
all.
we have been tried and tested.
Right, and tested.
Absolutely. Absolutely.
So we have some comments and some questions, and I want us to get to those questions before time runs out. Every week we run out of time because I can't believe
every week.
I can't believe the time already.
I can't believe the time.
So
I mean,
interesting.
wow.
So as usual, first out of the block is Miriam Samuel. She says, "Good afternoon. Good afternoon, Mrs. Samuel."
Good afternoon.
And we have Jamal Isaac. Good afternoon, guys. We also have Fanny King, who says, "Good afternoon, all." Fanny's a regular as well. So, first question, putting you on the spot, Mr. Hobson. Why Anjo does not give no claim discounts on vehicles?
That statement is not factual.
Okay.
As a matter of fact, we always reward our customers for having a claim-free year. So once you come and you're part of the company, you have a policy with us. Every year you drive without an accident, you get a discount.
Okay.
What happens is that there is a maximum discount that you attain after 5 years of being claim-free. Now, what happens is that in the event of a claim, most times, if you first loss, we would do what we consider to be accident forgiveness on the first loss. But if you have a second accident and a third, then you will begin to step back. You begin to lose your discount because the discount you get is a no claims discount. For not claiming, you get a discount. So
and
the
statement
statement
no claims is for the year. So when the year ends, you start back as no claims.
No, it builds, it adds. So for the first year you join, you get 10%. Second year you get 20%. The third year you get 30%. I think it's 30%, and so it builds every year until you reach your maximum, which is 50% for third-party policies. For comprehensive insurance, 60% discount you get.
So once you get to year 7, 8, 9, it's the same percentage as 5.
Yeah, you maintain a maximum discount.
Okay, so it may not look like you're getting a discount because you're paying the same like the year before.
Right. But you do get a discount. Yes, you do get a discount.
Thanks for that. Recky Moore says the government and the industry need to do a better job of educating the public about the importance of life and final arrangements insurance. He also says insurance will reduce the large-scale begging that goes into raising money for families' final arrangements. Too many people leave their loved ones to beg in order to cover their final arrangements. I don't know if you guys do insurance policies for insurance.
That's a very interesting statement, because I remember being in the program a couple of years ago, and I had a similar thought. And this has to do with the government having to deal with these large losses of people after a hurricane or after some disaster, because they don't have insurance. And I was considering maybe it's time the government consider making property insurance mandatory, just like they make car insurance mandatory, make property insurance mandatory.
At least some minimum insurance,
Yes.
to make sure at least you can cover.
Because what it does, it takes some of the burden off the government to be able to provide certain, assistance in the event of large losses, a large catastrophe. Because once you have your personal insurance, your insurance will pay for the damage to your home. Takes the burden off the insurance. I know some companies do offer final arrangement insurance, such as funeral grants and stuff like that. We don't do it at Anjo, but I know some companies may provide that. So that is already available from some company. Mm-hmm. But I do take the point about having government assistance in ensuring that people protect their assets.
Yeah.
I think it all comes down to education. I think a lot of people just, the discussion, the revelation that we had here today, right? People respond to different things and different messaging. But I think the average person, if you are motivated enough to want to acquire assets, you want to make sure that that asset is protected.
Mhm.
And I think to the
Absolutely.
extent that we can carve out messages that help people connect with that reality. Okay, everybody wants to make sure that we want to make sure when we leave work during the day, we go home to a roof over our heads. We want to make sure that, there's certain things in life that we want to be sure of. And I think once you can sell that same sense of security to the average consumer, regardless what type of protection you're trying to, um, you know, sell to them, I think it becomes a very valid message. Nobody likes surprises that
Hmm.
are unpleasant,
Absolutely.
unless it's a birthday party, unless it's the lotto, or
Yeah.
something that we know is totally good news or a good feeling. Nobody likes that phone call 2 o'clock in the morning. That's never good news. And
Never
once
good
you can
news.
say to people, how can you make sure you can't protect against everything? But here are some areas that that with a small investment, and what struck me as well, Mr. Hobson, is the percentages you're talking about. If you can be paying 7 and 8% of something's value
Hmm.
to
Hmm.
ensure that you have coverage in the event that you have a fire or something that's out of your control, any logical person will connect that this is something worth investing in. It's an investment.
Yeah. We have another comment. It's from Recky Moore. He knows you, Mr. Hobson. Mr. Hobson, it's great to see you in that seat. This is Belly's. Great job.
Oh, thank you.
You know who it is?
Uh,
Can't be many
Wrecking.
Bellys out there.
No, I'm so bad with names. I'm better with faces than names. But
Okay.
thank you very much.
Okay. And he also says insurance is the best tool to pass wealth down through generations.
That's exactly
And
true.
that
That
is true.
I would agree with you 100% on that,
Me too.
Rekmo.
Me too. Here's another question. Explain the hike in home insurance this year.
All right. So insurance is a risk transfer mechanism, and just like the customer will come to the company and buy a policy, so too insurance companies buy insurance from other insurance companies called reinsurance.
Mhm.
So the risk we take on is not doesn't stay with us alone. It actually shared with other companies called reinsurance companies. Reinsurance companies insure again with other reinsurance companies. So when there's a rate increase, it's because those other players have assessed their payout, overall payout, and determine that what it is they're charging needs to be adjusted because we need them.
Mm.
Where there's no way at all we can take on a risk for $1 million or $500,000
Yes.
by virtue of the small premium you ask to pay, and it stays with this company. We
Mhm.
must share it with other companies outside of the region. Co-
Uh,
Insurance also insurance also a concern about concentration. You don't want to have all your risk in one area because it doesn't lend to good business practice. You have a situation where this is Antigua. We are going to place a business with a company who has business in another part of the world.
mhm.
That's where you have a balance. So where there may be a loss in Antigua, there's not a loss in another part of the world.
Got
Mm.
you.
But at the end of the day, insurance would always look at the overall expenses and then make the determination whether or not what they're charging you is sufficient or not.
I
We
wonder.
know.
Oh,
So
go
now,
ahead.
just before, let me finish this quickly.
Mhm.
We know insurance goes up and down because as long as I've been here, I have had situations where the rates went even much higher than it is now. And when we have good years, it comes right back down. It's not like in some commodities that keep going up all the time and doesn't go down.
Mhm.
Insurance would adjust once we have good risks and we have very low losses.
Mhm.
The rates will go down again. So rest assured, it may be hiked this time, but continue to mitigate your risks. Make sure that you protect your property. The risk goes down eventually. It means claims goes down, which means that the rates will go down.
I wonder, Mr. Hobson, it just dawned on me, and I wondered if there's any connection at all to the economy, because overall, since COVID, there have been increases in just about everything. So I'm wondering if the increase has anything to do with the economy itself and the rising costs and inflation and all of that.
I think those are factors as well that that has a bearing on the overall cost. But I do know what really affect us mainly are the reinsurance costs.
Yeah. Okay.
That the reinsurance costs. So when we look at the news and we see something terrible happening in Indonesia, or it's something happening in Africa or wherever, we first have to look and see who are our reinsurance providers. Do they have business in those regions? If they're suffering a big loss over there, it's likely to affect us over here because it's one big pool.
Got you. So what's happening in Ukraine might very well affect our overall insurance.
Well, the good thing about Ukraine situation is that most insurance company doesn't offer war insurance.
Okay.
No, those man-made perils are not necessarily insurable.
Earthquakes and
are you saying they're not risks?
They are risks, but they are not insurable. There's certain risks that are not insurable.
Right. Okay. I get that. Okay.
No, I feel like I went to school today.
I tell you.
Well, you're gonna have a visit. I should get like 2 credits or something.
You're gonna get a visit, Mr. Hobson, because Miss Minerva Samuel says I will personally come and talk with Mr. Hobson.
Yes, I look forward to speaking to you, Minerva.
Lydia Peters says, good info. Thanks a lot. And Fanny King says, very useful information. Thanks for sharing. And I really want to echo that sentiment. You have really given us a mouthful. You have been very clear in what you've explained. And while I understood the concept of risk and managing the risk, I really liked the way you spoke about passing the risk on. So I'm very, very thankful for the information that you've shared.
Yep. And I just want to emphasize again that to the powers that be at your organization, you are a stellar ambassador. They should definitely consider how they can utilize your skills to help fill that gap, that void in education, because as you can see here today, it's a missed opportunity. There are a lot of people who, we can now see it's not like they don't want insurance. There's a lack of understanding, there's a lack of awareness. So I'm very happy that we chose this topic today. I don't know that we've ever talked about insurance.
We did very long when we started. Maybe was it on Likkle Byte? We had Darren Matthew Ward.
Yeah, but that was more general. He did talk a bit about it, but not with this level of specificity.
Absolutely not. No, this is the first.
This was definitely, and it also says to us, as far as our education programs, we definitely need to do a lot more with the insurance aspect of it.
Absolutely.
So I think it's 6 o'clock.
We have one more comment. One more comment from Shell Benji. Yes. Always a great treat. Excellent presentation. So, Mr. Hobson, you're getting your kudos.
Yes. So I want to end by saying, another note I made to myself. After working hard to create personal wealth, we need to protect it.
Absolutely.
People acquire insurance to protect themselves from major financial losses. And so I really want to thank you, Mr. Hobson, for sharing, your wealth of knowledge with us today. We are here to try to educate the public about all aspects of finance. And I think we can all walk away today with increased knowledge about risks and the control that we can really provide ourselves. Because that's usually what makes us antsy. Not having control.
And not knowing.
Insurance gives you a certain amount of control because you can transfer the risk
Hmm.
to the insurance company.
Indeed.
Yep.
Well, it was a pleasure, and I'm grateful and humbled by the expressions. Um,
Why
that's all I
don't you
want to do.
share your information? You should share your contact information.
Yes. Okay. So I can be contacted at Andrew Insurances. We're at Woods. Email is hhobson at anjoinsure.ag. That is HHOBSON at anjoinsure.ag. Telephone number 480-3050. You can call
And we
anytime with
again 480.
3050.
Okay.
Yeah, that's my contact. I'm here, willing and able to answer any question or concerns you have. There are lots of myths about insurance, and I think it's my duty and all the players in the industry duty to at least to sorts of handle those, address those, and allay the fears of the public, because
Yes.
insurance is not a necessary evil.
Yep.
It's necessary, not an evil.
Megan, we have to go and find a local saying that talks about
Exactly.
insurance.
I was thinking the same
Yeah,
thing.
I don't think
We're gonna
insurance
find
is
it.
one that we focused
We're
on. So
gonna find one.
we have to find it. Maybe Mr. Hobson may be able to help us with one.
Yes, 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 yes. I would mind.
And we'll call it the Hobson rule.
Well,
Yeah.
as I said, it was a pleasure. We signing out now.
Well,
Just about.
we're just going to make a
Just
few
a few.
announcements. Next week, I believe we have a lineup for next week.
Yes, we're going to
Mhm.
have persons from the cooperative league, the umbrella body of the credit unions. And I'm not sure of the exact names at this point in time, but we'll be focusing on credit unions next week, and there'll be representatives from the league.
Fantastic. So for Financial Literacy Month, and I don't want to go too much over time, we first week we looked at banking, very comprehensive presentation from CIBC First Caribbean. We focus more on their digital tools and how that is transforming the banking landscape. Today we had a masterclass in insurance awareness
Absolutely.
from Anjo Insurance. And of course, next week, we're going to look at another sector in the financial services whole industry. And we're going to be talking to folks from the credit union. So we want to thank everyone who joined us here today to be a part of this show. Continue to tune in to Observer AM to get your daily vibrations. We go all the way to the end of April. So lots of nuggets. And again, we use the local sayings because we know that those sayings will resonate. We want you to not only get the message, but we want to serve it to you in a way that you can then impart these nuggets of knowledge to your friends and family. So we know once we use these local sayings, they become more memorable.
Mhm.
And we also, during the last week of April, we're going to celebrate Teach Children to Save Day. And we will be going to a few of the primary schools. Next week, we'll probably share with you a clip from last year when we went to the Charlesworth T. Samuel School and taught the children about savings and played the game of life. And we hope to do that again this year with a few more schools. And then we'll wrap it up for another exciting celebration of Financial Literacy Month. Megan, do you have any closing comments?
Well, just to say that, just to remind persons, we are still accepting your local sayings. We had mentioned that at the beginning of this session.
Yes.
So for those of you who joined late, we want to get your sayings because we know that wrapped up in those sayings are some financial lessons. And
every grandmother had their own version. You know, what my
yes.
grandmother said, yours might have said something else.
Yes. So we want to hear them because we're compiling a list of them. We have quite a bit already, and it's all going to be part of our game that we are putting together. So please share the comments or the sayings from Auntie Granny Dada Granddad, and all the others, you can send it to me via WhatsApp 464-0841, or you can email us info@samuelfieldsconsulting.com. And thank you so very much for being with us again. We really appreciate having you, and your comments have been really encouraging. So thank
Yes.
you so much.
And of course, if you have not done so already, please like us on Facebook. And if you have not done so, we encourage you go to YouTube, subscribe, so that every time we go live, even if you forget, you'll get the notification that it's time for Likkle Byte Ideas. We want to thank all of you for your support. Our YouTube page is growing nicely. Share it with your friends. There's a lot of information. We have well over 100 videos with different programs, with lots of different. I go back and listen to them all the time because there's so much to learn and there's so much to share. So we want to thank all of you. If you're not on our mailing list to get our newsletter, please also send us a note to info@samuelfieldsconsulting.com, and we'd be happy to add you to the list. I believe that's all for today, you guys. As usual, you've been an amazing audience. We want to thank Mr. Hobson once again, and we'll see you back here next Wednesday at 5 p.m. for another edition of Likkle Byte Ideas. Thank you so much, guys. It's been a great show.
Bye, everyone. See you next week.
Bye bye.